Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. It's the RBI's MPC day. While rates and stance are expected to be unchanged, let's find out in detail about the expected outcome. Morning, JK, what are your expectations out of the MPC decision today?
Good morning, Swaraj. MPC decision very likely to be a status quo event. No change in rates, obviously, and no change in the stance also that is expected. A few reasons why the central bank would keep the policy unchanged. One is because inflation is still 1% above the target. Growth in India is quite strong, doesn't require an easing of rates. Then Fed rate cut expectations generally are getting pushed backwards. No certainty whether June will definitely happen. And then spike in oil prices above 91, which could effectively, reflect in the inflation in the coming months. Possible pickup in food prices post March will also be expected. So all these things will keep the policy engine. Of course, it's also in an election period when major policy changes are not expected to happen. So impact rupee, very little impact on the rupee because rupee has other factors to consider. We had the RBI circular impact till yesterday on the markets where there's a lot of unwinding seen in the options and the futures market. Although subsequently we had an indication or rather direction from RBI that the effective date of the circular is being pushed forward by 1 month, but still there was a lot of unwinding that happened yesterday that kept the rupee slightly on the weaker side. Rather, it traded at the weakest point, though offers from the PSU banks kept it from further weakness. Now, what we look forward to is more than the RBI meeting today. We look forward to the employment data from US, which has implications for the monetary policy, and then the developments on the geopolitical front, and particularly the oil price. In fact, overnight markets had been hit quite a bit by hawkish Fed member statements, and also the rising of geopolitical tensions involving Israel and Iran, and oil prices soaring above 91. What was also different was the yen recovery below 151, as a lot of statements from Japanese central bank chiefs centered on the currency as well. Now, on the geopolitical front, Iran has given strong statements, in response to an attack on their consulate in Syria, and they are reportedly preparing for a major attack on Israel. But these are the news reports, and markets are not really liking these situations. So, in fact, US markets, if you look at it, the yields had started higher. They came down after the jobless claims came higher, and also the challenge job cut showed higher layoffs, and they were further helped by these geopolitical tensions that came down. As far as the stock markets were concerned, they were rallying quite a bit after the jobless claims and the report showing higher layoffs, increasing the chances of June rate cut. But since then, the hawkish statements from particularly Neil Kashkari, who said that if inflation continues to move sideways, makes me wonder if we should cut rates at all this year. And it's the most hawkish statement that I have seen. And the other members have also been quite guarded about getting into an early rate cut by the Fed. Added to all these geopolitical tensions, did not help the sentiment in the stock market. Dow at one point of time was 300 points higher, ended 500 points lower. Such a massive movement, a massive loss in the index from the highs of the day. So risk sentiment is definitely not good. In fact, it has carried on into the Asian market, falling 2% in Japan, and other markets have been somewhere between 0.5% and 1% lower. We are awaiting developments on the geopolitical front because we are also into the weekend, and then we have the BLS report on US employment later in the day that should give more clues on the US monetary policy as well. On the dollar, euro continued to strengthen yesterday, but as it retraced somewhat after the hawkish statements, Japanese yen broke back, rather USD yen broke back below 151 after Ueda, the BOJ chief, made somewhat hawkish comments, and he was more particularly also talking about the currency. He was saying if FX moves appear to have an impact on the wage inflation cycle in a way that is hard to ignore, we could respond via monetary policy. So that's very strong statement, and already there was a safe haven bid in the yen and the dollar due to geopolitical tension of these. After these statements from Bank Japan chief, yen did break below 151. It's trading around those levels, but it does appear as if the market is slightly, the long dollar yen positions are slightly under threat now. At least for the short term, it can drift back towards 150. That is what I feel, particularly in view of the weekend. So a lot of things happening suddenly. Gold had, of course, a retreat of about 2% from the high of 2,306, as also the silver. But these are just small retracements compared to the strong rally that we have had. And perhaps gold had rallied in anticipation of these geopolitical developments, and some profit is being taken after the reports have become public. So we are looking forward to a very nervous and slightly volatile Friday trade. Thank God it's a Friday. Thank you.
Thank you, JK. And just quickly summarizing, for the MPC decision, we are expecting status quo, no change in stance or rates, as inflation still is above 1%. Inflation is still above 1% target. Growth is strong, so there's no need of a rate cut. Moreover, high oil prices plus an uncertain Fed pivot would also encourage MPC members to maintain rates. And of course, we had yesterday RBI direction regarding the ETCD 100 million limit, which has been pushed to May 3rd now. On the other hand, US employment data would be in limelight as markets look to assess how strong the labor market is. And because of yesterday's hawkish statements by Fed members, we saw a strength in euro, but we saw strength in euro initially, but after the hawkish statements, we saw some weakness. That's it from us today. Thanks for listening. Have a good weekend, and we'll see you all on Monday for the latest round of financial updates.